where the new shadow banking is, as it were. So like if in 2008, the shadow banks were on Wall Street, right? They were these broker dealers which weren't subject to any of the same prudential regulations, any of the regulations that banks have to comply with. They had copied the bank business model in some cases, had the same names as Wall Street banks. And then in this kind of act of massive regulatory arbitrage, leveraged themselves up and blew the, and then proceeded to blow up themselves. That's a very Wall Street bank centric story that we all are familiar with now from 2008. And we missed it at the time.
Right.
And as Alex said, like in the wake of that, I argue that, Wall Street banks do have a number of new guardrails put on them, and you might think the capital requirements are inadequate, or that, just there are new forms of regulatory arbitrage that have emerged where new financial institutions have found ways not to evade those capital requirements. But I do think Dodd-Frank is like a kind of partial success story, and some of the risk has migrated elsewhere.